Okay, hey, Ryan here. Welcome to the weekly update for Bond Street Mortgage. Hey, James. James is here. He's going to tell us a little bit about current rates. What's going on?
Hey Ryan, how are you? Happy Friday. It's a little bit of a crazy week, actually, as far as interest rates. Obviously, we started or ended last week with everything going on with the FBI and Director Comey getting fired, to perhaps obstruction from the White House. And we live in that 24-hour news cycle. So the equity markets took a beating early in the week, especially I think it was Tuesday, Wednesday, that the Dow was down almost 400. And of course, typically what happens is inversely, right? Stocks go down and the bond prices go up. What was a bit interesting this week, the move probably wasn't as aggressive as it should be. Again, we're kind of kicked off. We have kicked off the spring market here. Banks, especially secondary market investors, where a lot of loans are bought and sold, and those investors are not moving those spreads quite as much because they know people are buying home. This is the peak season. This is where the money is made in the banking world, and so rates have been primarily, and looking at yesterday and today, they bounced back. So we're primarily where we were last week. Again, it comes down to economics. The Empire Manufacturing Index was much lower than expected. The Philly Index was much higher than expected. So we're getting this consistent unevenness out of the economy, out of the consumer, and you're going to continue to see the 10-year bond track what the projected GDP is of the country at this time. So 10-year bond is trading at 2.25. That's kind of what the indication is, that the economy is growing in that 2.25% range. We've been hearing about tax reform, all of this other stuff that's supposed to be coming out of Washington. It's not happening because of the gridlock and the scandal, that bubble up on a daily basis. So bottom line is rates are flat. Stock market is still up considerably. I think the consumer is in pretty good shape. Could it be better? Yes, but there's no major inflationary pressure at this time to indicate interest rates are going much higher, other than the business opportunity, again, from Wall Street and the big banks, that when the paper is being bought and sold, they're going to keep those spreads a little bit higher than normal because they know this is the buying season and they stand to make more money.
Okay, so a lot of that was a little technical for me. So everybody else watching. So they're about the same as they were last week, about hovering around 4%, depending on your. There's a lot of variables, but best case scenario on a 30-year fixed, we're in
that range. And again, depending on 30. If you need a 30-day rate lock, and obviously you'll be on the lower end of that range. With most purchase business, you're looking out 45, 60 days, and you're in that 4% range.
Okay, 4% range with good credit and everything else. None of this, we should disclose, none of this is a quote or anything, right, James? This is just
no, absolutely not. Yeah, everyone's situation is different. Programs vary. So yes, whatever your situation is will affect the interest rate.
Great. And now on to products and news. You were telling me about this fun, exciting new construction program. So I'll let you talk about
finally,
that.
I mean, it still doesn't cover all of the market, especially, in many areas of northern New Jersey, or especially in the jumbo area. But it is a start. I've been really pressuring our secondary market investors to give us a new construction product, a one-time close. So we have something available. It is up to the high cost limits. It will track Fannie Mae loan limits up to that 636-100 for single families, as far as a single family condo, manufactured home, or PUD, up to the 636-100 loan amount. And with 720 credit score, you can do as high as 90 LTV. Again, everyone's situation is different. 6-month, 9-month, 12-month. Construction period, and the interest rate, it's one-time close, construction to permanent loan. The permanent rate will be dictated off of the amount of time that you need in that construction period. So obviously, if we're going 12 months out, that permanent rate is going to be higher, and the interest rate is interest only during the construction period, and it is plus 0.75% of what your permanent note rate is. So if you're borrowing, your permanent rate would be 5%. Just to use an example, your construction financing rate will be 5.75 interest only. So
Okay.
it's a really great development because we know there's no inventory. We know there's been, no opportunity for this type of money. Investors have it available, but again, it's really the banks, especially the commercial banks that have been doing it. They can cherry pick because so many people are trying to do something in the rehab construction space today. So this is a really great program. Unlike the home style renovation loan, which is available to investors, this right now is just for primary residents,
Okay.
but we're pushing to get it available for investors as well. And this is national.
So for the real estate agents listening, this is a nice lead generation opportunity. Maybe send an email out to your list, or maybe send this video out to the people in your database and mention that an alternative to competing with other buyers might be to build fresh and send them a list of land, right?
Absolutely. Yeah. I mean, there's been no financing for land loans at all anywhere in the country. Again, other than if you had that long standing relationship with the local bank that you've been doing business with for years and years, the average person is not buying land today, not getting financing. You'd have to go out and buy the land cash. And then, there's some product out there for investors to get 50% of the construction budget. But if you have a sizable project, you're out of the market, right? Because you're buying land, maybe especially here, in northern New Jersey and most of the state of New Jersey, a decent sized piece of land is going to cost you a couple $100,000, if not more, double that in northern New Jersey. And then you need another 400 or 500 to build. Who has 500,000-600,000 liquidity just to say, oh, I can just go buy something. Yeah, you're going to pay a premium. Somebody else built it, but obviously you'll have a lot more flexibility. This gives you that flexibility to build the house that you want.
Okay, so let's just walk through it. So I'm looking at a lot that's 200,000. I don't know what it is up there in North Jersey, but 200 grand for a lot. It's got my construction costs are going to be, I have no idea, but 100. What am I building? A 2,000 square foot house for
2,000 square foot house. Let's say, you're building it out for 150 to 200 a square foot, dealing with the contractor. So let's say it costs you $3 to build it, $3 to $350.
Okay, and then
you're in $550 into the overall project with a 720 credit score. You're going to be able to finance 90% of that total project costs.
So let's say the land is 200K, construction costs just call it 150, right? And then so what's cool here is that you got instant equity, probably, right?
Definitely.
Yeah, probably have instant equity, and you can finance. You're financing based on the after rehab. No, you're financing based on the
total. You're financing based on the total cost
of the land and the construction.
Yep.
Okay, financing is 90% of 350 in this scenario. Nice. That's amazing. I mean, it's like putting 10. Yeah, that's amazing.
Yeah, where the home style reno, you were doing you were putting that 10% down in the purchase of the home and the renovation. Again, obviously that's considered a rehab project, although you could knock down on the existing foundation, leave up one wall, that's considered a rehab. But if you truly wanted to build a new home on a piece of land, you could not use the rehab product for that. So this gives you the opportunity to do that. Not that there's much vacant land in northern New Jersey. There's some, but again, this is a national product. We can do it anywhere in the state.
There's cheap land down here in Florida. Everybody come on.
Yeah, Florida as well. Absolutely. And, this has been a very localized product. That small local commercial bank definitely has been filling that need. We've done quite a bit of business there. But this really gives you the opportunity to do it on all the states that we're licensed in, which is 9 now. So more of a national basis and have a product for the average person looking for it.
Can I ask a question, James? Because I think you have some experience here. How would I say I was totally green, which I kind of am when it comes to building something new? Where would I find a contractor for this? Do you contact a new home builder? Somebody who's a pro?
Yes, you definitely, having experience in building myself a bit, not much, but doing some rehabs and new construction, the contractor is key. There's a lot of different places to plug the Angie's List or home advisors out there if you don't know somebody that is a general contractor, but absolutely need a general contractor in a new construction type situation, even large rehab, somebody that has a great reputation. You're going to sit down, they're going to go through a budget with you on what it will cost. to build the type of home you're looking for. And, from there, getting that general idea that, we can base our numbers on for the loan. So referrals, you definitely want to do your homework, just like when you're picking a lender or an attorney or a realtor for that matter. Contractor is vitally important to this whole equation, of course. So you want to get the right contractor. You are protected in the sense that, as the construction is done, there's inspections done and the money isn't released until the work that's supposed to be completed in that inspection period is done. But obviously you don't want to get left in a project that's stalled out or incomplete and because the contractor, hasn't done what they're supposed to do.
Could you do you think small home builders are going to jump on this, guys who build one or two houses at a time and maybe partner? Do they operate that way? You would contract?
Yeah, I mean, look, for the individual builder out there, like I said, unless you've really been doing it a long time and built a track record, even let's say, 10 years track record, especially coming out of the financial crisis, and if you're doing it, that builder has sources for the financing to build houses spec. No question about it. We see it here every day. But, it's also an avenue for the builder to say, if you've got multiple projects going on and you have somebody that wants to build a home, say, hey, look, here's a lender that will finance this for us. I'll be the contractor. Talk to them. You borrow the money as the homeowner. I'll GC the project. And you know what? That may cost you a few less bucks because I don't have to lay out my capital to buy the land. I don't have to put up that initial money to get the project started, the architect, yada, yada, yada. Plus, I can build the home the way you really want it.
Right. Okay. So realtors, tell your builders about this.
I'm a builder investor out there and I'm buying the land and I'm improving it. And I'm going to build this house based on these plans that I think will work in that area. Obviously then that premium for when I go to sell it is going to be built in because I took all the risk. If I have a product that I can offload the risk from a money standpoint to the homeowner, but yet I'm still going to get the construction job. Hey, if you're out there and you have people that are looking to do, some building and they just were looking for ways to finance it and you as the contractor as well, then this is a product for you.
Cool. Okay. So let's spread the word on that one. And then you had something on, you had a scenario with a self-employed borrower this week with the self-employed product you've been talking about.
Yep. And so, again, we've discussed this in a few webinars, and the self-employed borrower today is the most underserved person out there. We've been working really, really hard to develop products to cater to the self-employed individual. And, it's just a question of the regulations out there today and how things need, how Fannie Mae and how Freddie Mac and the typical bank will look to to structure your income, right? So debt to income being a big part of obviously qualifying for a mortgage today. Being a business owner myself, I have always looked at the fact that, if you own a business and it's successful, you should be able to get a mortgage today, not just because Fannie Mae says this is your gross and these are your expenses and therefore this is the income we can justify you to qualify for the payment. You have great credit, you have good reserves, you have very little debt. You show yourself to be a reasonable, responsible borrower and therefore have the ability to repay the loan. So this program is available, unfortunately right now, only in New Jersey for self-employed borrowers. But the situation, the scenario that we're talking about, this person fit exactly that. Great credit, very little debt, business owner, doesn't have much way in the way of liquidity, but he had enough for a 20% down payment and a few bucks in reserve. And like every other business owner, we count our pennies, and a lot of us invest our liquidity back in our business every day. So he's selling a property and buying another property. The agent had referred him over, having a tough time getting a loan. Was the first time I ever had worked with the agent and the company. And so kind of looked at the situation and looked at the cash flow, looked at it more on a common sense basis. And we have an investor that does look at this more in a common sense point of view. And what we did was he's got his current home listed for sale. We cross-collateralized that property, bought the new property, close to $1 million. So it was a nice payday, for the agents as well. Probably picked up 25, 30 grand in commission on the buy side. And now they have his house listed for 800 something thousand. So another, hopefully $25,000, $30,000 payday there for them. Hopefully they can get both sides of it. And, when we talk about value add from your lender, everyone knows we're here to invest, co-market and invest with our partners and grow our brands and grow our businesses together. But the real value add, I say, when you're choosing, especially us here at Bond Street, is we're going to get things done. And, we work together. We've built a great platform. We have a lot of great resources. And that's really, what you should be looking at first and foremost when choosing your lender. Can they get things done for my clients? And, that couple extra $100 a month you want us to co-market with you on Zillow really doesn't even come into the discussion when we're looking at what we really bring to the table as your partner.
Right. So we think about this a lot here, right, James? I do personally too. And this week I started calling them digital donuts. Like the lender, are our guys bringing donuts to real estate offices? Are we buying donuts?
Everyone's got a little healthier these days, so it's more bagels, which is fine. That's the traditional things that we do. We do office meetings, and that's great. That always works. I have no problem, doing those things. And like I said, I have no problem co-marketing. It's obviously, we want to have the right strategy in place. And we want to be equally invested, right? Obviously, from a RESPA standpoint, we have to be. But there's no, I'm not here to be the free lunch for anybody. We know what we bring to the table from the mortgage aspect, and then all the other things come along with it, right? We have the great digital platform. We have great minds on the digital side working with us, like yourself and Shane. Again, if I'm a realtor out there, my number one question is my mortgage partner. The real value is that they're going to get done what they say they get done. We stand behind that pre-approval letter. And not only that, they're going to go the extra step to help the people that, anyone can do the 5, 10%, even, 20% down, W-2 employee, FHA, Fannie Mae, your conventional programs. Quicken is the best at it in the sense that they do the most volume nationally. But, real people have real different situations when it comes to lending, and they should, be afforded the opportunity to get a mortgage. And we've always prided ourselves on that.
I don't know anybody like that. I'm trying to think about people I know who fit that right in that little box. I know they exist, but most people, they either have a business or
It's funny because, I was reading some industry news about some of the top originators, and they had interviewed this top originator in the country and basically said, I do so much volume because I only take on the easy stuff. And, I said, well, he's really smart. Because again, if it fits the box, here's the paper, this is the way we're going, and, let it go through. But, the average person, yes, in theory fits the box, but, things came up. They had they're moving all this money around. There's, of course, what's typical of a self-employed borrower. Today everyone has to be viewed. And again, you can call your congressman and complain about it, but especially when it comes to assets and income, everyone is looked at as they're a criminal in some nature. So we have to ask 50,000 questions, which is fine. But we need to provide the solutions, especially again, we can argue the ethics of it or the morality of it, but you can be a first-time home buyer today, and the FHA says you can your debt-to-income ratio could be 50% of gross W-2 income, but yet I have someone who's self-employed putting 20% down, and because of the nature of their business and deductions, they supposedly or don't qualify for that conventional mortgage because that's the way we have to look at it based on the regulations that were provided today. I would lend that person money all day long that fits the bill of this, this example that we just gave. And, I think we have to get back to that. There's so much noise out there today with all of the marketing things that can be done and who can do it. The reality is most of us don't know too much about that. We, again, have taken a lot of pride to learn that, and we're going to invest money together. We want to know what we're doing. but we can't lose sight of that. Your lender really should be somebody that's going to work with every one of your clients, all walks of life, and provide solutions to get those people mortgages. If I help you close 2, 3, 4 extra deals a year because of us doing our homework and going the extra mile to say this person should get a mortgage and try to find a way to get that structured, still give a very good interest rate. That interest rate on that example is a 4.875 5/1 ARM. The client paid a point. Okay. He's self-employed. He'll take the extra interest and write it off on his mortgage. His cash flow can more than handle it. Yeah, it's not 4% 30-year fix that you're going to get from Fannie Mae today. This guy's ecstatic about getting the loan. It's also not a 7-8% of some of these non-QM products out there either. So it's a happy medium. And again, if I'm helping you, if we're working together and we can find a solution for this person and put 30, 40, 50 extra grand in your pocket in commission because we did, I think that'll more than make up for the $200-300 you're asking me to co-market you with you on Zillow.
Yep. Okay. So that was for agents, but there's a message in there for the the person looking to get a loan out there. You've got your Rocket Mortgages and all these things on TV. That they're kind of one size fits all. And when you hear no from them, there are companies out there like Bond Street that will really look at your situation and try to come up with a creative solution. That's that, James. Last thing I had here, just for agents and anybody listening right now, we added 100 books. It was kind of fun compiling this list. 100 not about real estate books that could help you get more leads, listings, and commission checks. They're basically marketing, sales, and success books. Figured it was a fun resource. I've been getting good feedback on it. We emailed it out yesterday. So anybody wants to check that out, it's there for you, bondstreetmortgage.com/100 books. Anything else today, James?
No, that's it. I probably talked too much.
No, it was good. You're getting really good at these. I hope everybody's enjoying them. We're getting great feedback. And if there's anything anybody listening wants to hear, just email us, james@bstloans.com, or right? It's probably a good email. Let James know your negative feedback, and you can email me with the positive feedback, Ryan@bondstreetloans.com.
Thank you, Ryan.
All right. See you next week, guys. Thanks, James.
Have a great weekend. Thank you.